Hey there, my name's Curtis Lucas and you're watching Empire Building. In this video I'm going to be covering two topics, the first being Marathon Digital's quarterly earnings report, as well as the exciting news that Bitfarms is being uplisted, or their application for a NASDAQ listing has been approved. We'll talk more about what that means for the future stock price and the company in general. As always, I encourage you all to do your own research. Always make your own investment decisions. You're the only one who's responsible for your investments, and beware of scammers and impersonators down in the comments. They've been relentless. Do not message anyone who asks you to contact them on any third-party sites or applications. And now let's get on with the video. On May 7th, Friday last week, Bitfarms announced via a press release that the application for a NASDAQ listing had been approved. As a result, the ticker used for Bitfarms securities traded over the counter, OTC, under the current symbol BFARF, which always kind of looked like BARF, but will now seamlessly transfer to the new ticker symbol BITF, or BITF. This is the same ticker symbol used on the Toronto Stock Exchange. The actual date of the uplisting hasn't been announced yet. They do say down here that the last remaining requirement prior to listing and trading on the NASDAQ is to confirm Bitfarms common shares are eligible for electronic clearing and settlement through the Depository Trust Company. The process to confirm DTC eligibility is moving forward expeditiously. As we learn more about the timing for approval, we intend to provide a further update to the market. When approval has been obtained, we will announce the first date BITF will begin trading on the NASDAQ. Now, the move after that announcement was decisive, totaling a complete about 22%, rising as much as 28% on the day that was announced, reaching a further 42% increase by the open of the following day, which, as we know, came to an abrupt halt and reversal, dropping all the way back down to this morning, where we were even lower than where we were at that announcement. Like anyone needed to be told, these things are volatile. Regardless, this is fantastic news, and the ability to access worldwide capital markets will go a long way. It's very difficult for some international investors to invest in Canadian stocks. Their brokerage needs to be set up in order for them to do this. Brokerages such as Robinhood and Webull are unable to provide their customers with access to the Canadian markets. This is actually due to the fact that both of those exchanges provide commission-free trading in exchange for the payment for order flow data that they sell to market makers. In Canada, that practice is forbidden by law, which, as far as I'm concerned, is a very good thing. But it does prohibit companies listed on Canadian exchanges from gaining access to this very large pool of investors. And this fact has been evident when comparing the market cap of these Canadian Bitcoin mining companies, as well as Argo Blockchain, is listed on the London Stock Exchange, with the American counterparts like Riot and Mara. For a long time, Bitfarms has been one of the largest Bitcoin miners in the world by hash rate. They've been mining at a very high hash rate for a very long time. Yet their market cap is only a fraction of that of Marathon and Riot. And they've also been announcing aggressive plans to expand that hash rate. Currently, Bitfarms is actually my second largest holding next to Mara. And despite the hiccup that we've seen here over the last couple of days, this is still a great opportunity. Bitfarms currently has a total installed capacity of 1.4 exahash per second. Now, their efficiency isn't quite as good as Marathon's because some of their equipment is a little older. As I mentioned, they've been mining at this hash rate for quite some time. This is why their total cost per Bitcoin is a bit higher than that of Marathon's, but being able to acquire Bitcoin at less than a seventh of what it costs to purchase it on the market is why we're invested in these companies in the first place. And now getting over to Marathon Digital's quarterly report, there are a number of things I really want to highlight in this because it was very reassuring to read this, despite the fact that the market clearly does not appreciate it. And we're already seeing the negative articles being put out there. Right off the top, we're seeing articles such as this, yet again from our friends over at Investor Place. They seem still to believe that Marathon suffered a loss of 20 cents per share. I could try to spend my time trying to understand where they come up with these numbers, but frankly, I don't have the patience for this. These articles will print whatever they want, clearly. Let's just focus in on exactly what the company itself had to say. Revenues increased to $9.2 million from just over $500,000 in the first quarter of 2020, which is pretty much in line with what we had expected. It's pretty easy to do the math since we knew exactly how much Bitcoin they mined. These articles will constantly point to how they missed on earnings, which means that they earned slightly less than analysts predicted, which only tells me that analysts don't know how to do math because we already knew how much Bitcoin they mined. It's very easy to do the math on this. They also point out that due to a $132 million unrealized gain from the change in value of the Bitcoin purchase that they had made for $150 million back in January, the net income was improved to $83.4 million, or 87 cents per diluted share, from a net loss of $1.1 million, or 12 cents per diluted share. Cash on hand was just over $200 million. That should go a long way for funding their mining operations for the foreseeable future. And this is actually something I like to look at when you consider how much it costs for them to produce a Bitcoin and then how much that Bitcoin would be worth. In their investors report, Marathon had pointed out that the cost for them to produce one Bitcoin sits at about $4,500 per Bitcoin. Now, as we know, this cost is going to rise, but even if we increase that to say 6,000 or even 7,000 over the next year, or heck, we can even go straight to 10,000 for simple math. With $204 million on the balance sheet, divided by $10,000 per Bitcoin, and the cost to convert that, that means they could roughly acquire 20,000 Bitcoin through their mining operations while depleting that cash. And even if Bitcoin's price is still sitting at around $60,000 after that time, that still brings us to a total of $1.2 billion worth of Bitcoin mined out of $200 million that they originally started with in cash. This is why we invest in these companies. It's not that hard. They're converting cash and electricity into Bitcoin. And I don't need to tell you what happens if the price of Bitcoin goes to $100 or $200 or $300,000. And I just arbitrarily increased the average cost to $10,000 just to make a point. A lot of what they also announced here was, again, what we already knew. By the end of the first quarter, they had 6,800 miners generating only 0.71 exahash, which is also the number that these negative articles will like to refer to. They're going to ignore the fact that they also announced that as of the time of this report, that number had actually doubled to 13,644 miners, generating approximately 1.46, which actually puts them officially ahead of Bitfarms. So what you're going to see spread all over the place is that people will dig into these numbers and cherry pick things and omit what they don't want to include. I'm trying to actually include the entire picture here, both the good and the bad. I do have some criticisms. Many people might think I'm just this uber bull who's only going to say nice things. There are some criticisms that you could legitimately hold about the company. As they mentioned in their report, the fact that they were able to report an overall actual gain in terms of earnings per share was the result of the fact that they had unrealized gains from the purchase of the Bitcoin that they had made at a purchase price of $31,168. That's an average purchase price. That Bitcoin that they purchased is worth substantially more today, contributing to their overall earnings per share. Now, if you were to take that away, then yes, you'd be looking at another loss here. But let's look a little deeper into this. Mara reported that their operating loss, in fact, was $47.1 million in the first quarter compared to an operating loss of $1.1 million in the first quarter of 2020. That seems like a substantial amount of money to lose once you're subtracting, once you're not including the unrealized gains from the purchase of those Bitcoin. They go on to say here that in the first quarter of 2021, operating expenses included $54 million of non-cash items. This means issued shares. These were reported expenses, but they didn't come out of their cash on hand. This included $52.1 million in non-cash compensation and $662,000 in impairment of cryptocurrencies. Once you exclude the non-cash items, the operating gain for the first quarter of 2021 was $6.9 million. So what does this mean? In essence, what they're talking about here is that in the first quarter, Mar had issued a lot of share-based compensation. So executives like Mariko Komodo mainly received a large amount of payments in the form of issued shares. We've talked about this many times already. And I can understand how some people might have an issue with this level of compensation. And that's okay. As an investor, if that's not something you're comfortable with, then you can choose to invest somewhere else. However, I might argue, or I might take the position that as a result of Mariko Komodo's guidance, he was the one that made the decision to purchase those Bitcoin at that timely moment. That gave Marathon a far better leg to stand on, which definitely more than covered the cost of that compensation through those shares. And in the end, it didn't take away from any of the cash that they had on hand. What this also means is that those are one-time expenses. Most of the bonuses that had been planned to be paid out have already been issued. Based on the full-length SEC filing, it does appear that there's still an additional approximately 2.5 million RSUs to be issued to Mariko Komodo. So I do expect that there, I believe, will be an additional expense showed even in the second quarter. They mention here that these will be issued, they'll have to issue additional shares to cover that bonus payment within about 15 days of this report. But as I've mentioned before, this form of compensation, this compensation plan, has long been made public, and shareholders were well aware. It was voted on and approved by shareholders. But this doesn't have anything to do with their operating expenses, which is why they've highlighted the fact that once you omit these non-cash related expenses, their actual operating performance is quite impressive. And so long as you hold the opinion that Bitcoin has a lot further room to grow, Mara is the best position to benefit from that. Their hash rate is going to grow faster than anyone else's, and they're already just about leading the pack. And it's only going to continue to accelerate. Plus, with the help of that purchase, they managed to get themselves the highest balance of Bitcoin on their balance sheet. Taking a longer-term outlook on Bitcoin, it's very difficult for me to be bearish at this point. Now, obviously, anything can happen. But me personally, as an investor, I came here to invest in this story. And as far as I'm concerned, this story is not over. It's only just beginning. And all that's happened here is it would appear institutions have provided for themselves the opportunity they needed to get in at a price they were trying to get in previously, or would have liked to have gotten in previously. Unfortunately, retail investors only grow more fearful as the price drops, whereas institutional investors get more excited. They get more greedy. They truly do know how to approach this from a completely emotionless point of view. They're not going to lose any sleep at night knowing how much money the average retail investor lost as a result of these events over the last couple of months. As far as they're concerned, they see all that money as theirs, and they're not going to lose any sleep over taking it from us. For me personally, I'm completely happy to be able to take the lessons I've learned and retain the shares that I still have. Well, that's all for this one. Now let's get back to empire building.